Do you have a women-owned business? If you're a woman and you own a business, or you know somebody that does, I'm going to give you 5 tips to success with getting the funding you actually need to succeed. We're actually going to do this 2 days from now, but we're moving it up and we're doing it today because we want to make sure that you have the training that you need to be able to get money. So we're going to talk about how you can get money today if you're starting a business. We're going to talk about if you're a woman-owned business, how to be able to get the money you need if you don't have the cash flow to verify, if you have credit issues. Basically, if you've struggled to get funding before, I'm going to give you the tips to success with being able to get the money that you need. So the number of women-owned companies is growing fast. These well-known companies are owned by women as well: Cisco, Liquid Paper, and Proactive. Some things that I thought were interesting along the way of doing our research. So companies owned by women are forced to be reckoned with. According to Fundera, 40% of U.S. businesses are now owned by women. So that percentage is increasing radically, and it's doing so very quick. Yet many still find it very hard to get funding. As a matter of fact, a lot of minority-owned businesses are still struggling to be able to get the money that's actually needed. So let's talk about how you get started. First of all, you kind of got to get started on the right foot. And whenever I talk about money, I try to always talk about fundability, because fundability basically has to do with how your business is set up and structured. And when we talk about minorities, when we talk about African-American owned businesses, when we talk about women-owned businesses, when we talked about immigrants owning businesses, these are groups that really struggle to get funding. So one of the first things you have to do is go back to the basics. You got to make sure your business is set up and structured the right way, because again, this is a large part of the battle with getting money. And if you're doing this correct, then you already have a significantly better chance of being able to actually get the money that you need. Now, that sounds simple enough, right? But until you consider that many entrepreneurs start the businesses from home, well, then you realize it's not as easy as it may be. Look, a lot of us fall into these traps and make mistakes when we set up businesses initially. And the problem with that is that we don't set up the business the right way. It's not structured the right way. A lot of the information is mismatched, and that's what gets you denied. So you got to separate your contact information. If you're a woman-owned business, you should really do this if you're if you own a business, period, meaning that you've really got to constantly think about the separation of you and the business. You got to build a credit profile for the business that's separate from your own. You need a business phone number, a business address, a business email address, a website. Everything that you have, you need to use separately for your business. So just because I have a cell phone here doesn't mean that I'm going to use that cell phone number as my business phone number. Just because I work from a home office here like I do, that doesn't mean that I want to use my home address as my business address. I want to set up a virtual address. I want to create separation of everything I do. So this is one of the simplest conceptual things to think about when you're setting up a business, is just to separate the actual business from you. Every aspect of that business should be done separate, including the entity itself, right? You don't want to be a sole proprietorship where you are the business. You need to choose an entity type even where you and the business are actually separated. So as we talked about, you need a real physical business address. You can get this done through a virtual address, DaVinci, Regis, Alliance. Those are places where you can actually get an address that makes it look like you're in a high-rise building in Tampa, Florida. But the reality is you can still work from home. Way different than PO boxes and UPS addresses. Those are just not looked at as credible. They're actually held in a database that lenders and credit issuers have, so they know that you're using UPS and PO box addresses. But if you're using a virtual address, they don't know that you are. So a virtual address really allows you to have a big physical presence and location without needing a retail location. So let's look at Credit Suite, for example. We had 2 offices, and during COVID, we shut them down. We realized we didn't need them. We went completely virtual. So I am a big advocate for home-based businesses. We run an 8-figure business here from home, right? It works from our homes. But we still have a virtual address on Kennedy Boulevard in downtown Tampa that looks like we occupy a big high-rise building that we use on all of our applications for credit financing and everywhere else. So you need the same thing. A virtual address makes a lot of sense. Plus, if you move, you don't ever have to change addresses. You can always use that same virtual address in the lifetime of your company. Okay, you need to make sure that you get an EIN number. Preferably, you want to incorporate over any other kind of entity type. You want to get a DUNS number. You also want to have a dedicated bank account as well. Okay, so what's the point? Well, the point of all this, again, is to build fundability. As I mentioned, if you're going to try to get money as a women-owned business, you've already got an uphill battle. It's already statistically way harder for you to get money than men have experience trying to get money for a business as well. So you got to build fundability to at least even the playing field and give yourself a good chance of getting the best funding once you've done this. Once you've got the fundability in line, then it's time to start looking at some specific funding. And again, you want to skip the step. A lot of people do. I don't blame you. Okay, as entrepreneurs, like we just want to go get the result. We don't want to deal with all the little details that it takes to get the result, right? It's just the way our brains work. I don't know. It's how we're wired. So a lot of people skip fundability and then they get denied and they don't know why. And they think it's because of their credit and income. And they try to go fix all this elaborate stuff when it had nothing to do with that. Really, it all just has to do with the fact that your business being set up the right way. So you got to get that in line before you even think about other kind of funding. Now, let's talk about some funding you can get. Credit line hybrid. One of my favorite my favorite type of funding for startups, because you're able to get up to $150,000, 0% interest rates, credit lines, 0% for 6 to 18 months. They report to the business credit reporting agency. So you're building business credit while getting access to credit lines at 0% interest. Can't beat that. You don't need cash flow. It's no doc. You don't need bank statements. You don't need tax returns, any of those type of things as well. Fairly easy to get approved for. All you need is good personal credit. If you have good personal credit, you can typically get approved for up to 150 grand. How much you get approved for depends on your highest limit revolving account that you have now. Okay. So if you have a $10,000 credit card account now, you could typically get 5 times that, which is $50,000. Okay. So you can usually get 5 times the amount of your highest credit limit account. So, with Credit Line Hybrid, it's a great program because all you need is good personal credit, a 680 FICO score and higher. Okay, if you don't have that, you can rely on a guarantor as well. So if a guarantor has a 680 FICO score and higher, then there's a good chance you can get approved. Now, there are caveats here. They want you to have credit established, revolving credit, not authorized user accounts. They want you or the applicant to have, at least one credit card with a $2,000 to $3,000 limit, preferably multiple credit cards with these kinds of limits. Okay, on top of that, you really don't want to have a bunch of inquiries. They don't want to see you're out applying for a lot of credit and financing. So the number of inquiries you have, the utilization on your existing credit cards, that could prevent you from getting approved, or it could mean you get less money. So some things to keep about, but this is perfect financing for startups because your cash flow isn't needed. You don't need to have collateral. All you need is good personal credit for you and somebody else. Now, Kenshin says, how many trades do you need to get a vehicle with a no personal guarantee? Typically 14. So if you have 14 accounts on your business credit reports, or what we call payment experiences. So if I look at the accounts on Dun & Bradstreet, Experian, and Equifax, even if it's the same account that reports to multiple, I want 14 total across all 3 bureaus. If I have that, I can start to get auto financing with Toyota, with GM, with Ford, with Ally Bank. Those are the 4 most common sources, all without a personal guarantee. Great question, by the way. Okay, so let's talk about business revenue lending. Another great way to go for women-owned businesses. First of all, you don't need to have good credit. So we talked about the one extreme where you need good credit. This one, you don't need good credit. You can get approved with a lot of lenders with a score as low as 500, with other lenders with a score lower than 500 as well. Okay, some of them don't have any kind of credit score requirements. All you need to have is consistent cash flow. If you have consistent cash flow, money going into your bank account, that's $10,000 a month or more, there's a good chance you can get approved. PayPal, Square, Stripe, they offer their own unique version that you can get funding through them for whatever money you process through PayPal, Square, and Stripe. So some of the easiest, fastest money to get is revenue lending. Merchant cash advances is equivalent to that. With both of these, you can usually get up to 500,000, sometimes even higher. With merchant cash advances, they only look at your credit card transactions, not all of your total revenue. Okay, but it's easier to get approved. You only need 6 months time in business, 5,000 a month in revenue. If you have it, there's a good chance you can qualify for merchant cash advances. So revenue lending, merchant cash advances, 2 of the easiest to qualify for funding products if you have consistent revenue. If you don't, you want to look at Credit Line Hybrid. That's based on you just having good personal credit. AR financing. So when it comes to SBA loans, which is what you and I ultimately want, because you can get the longest term, the lowest interest rate, therefore the lowest payment. When it comes to account receivable financing, this is the most common asset that's used for SBA loans. So it's something to consider if you're not doing it now. Let your customers pay you on terms. What I mean by that is, for example, Credit Suite. If you enroll with us to get our business finance suite that helps you build business credit, get financing, improve your fundability, right? That's our main product that we sell. We let you pay that over 7 months' time. That's what account receivables is. You're buying something from us. We're giving you 7 months to pay that. That's called account receivables. Now, that is an asset to our company. The fact that we have, hundreds, if not thousands of people that owe us money on terms, that is called account receivable. That's an asset. Now, that asset can and typically is used to qualify for SBA loans to cover their collateral requirements, but the asset itself can be used to qualify for funding. It's now as much as 90% financing you can get borrowing against these receivables. So let's just say that I have $500,000. Well, let's not even do that. Let's say that typically in my world, right, we give you access to everything. You make your first payment, and then we're expecting you to pay over 7 months. Well, instead of us waiting 7 months to get paid, an AR factor or finance company can basically give us that money today, the majority of it, up to 90% of it we get today. We don't have to wait 7 months. So I'm giving you, my customer, 7 months to pay me, okay? The lender's giving me those 7 months payment right now, minus 10%, which includes their fees, and they pay that other 10% whenever all the money is in. So it's a really good way because I let the customer, you, pay over 7 months. The lender gives me almost all my money right now, so I don't have to actually wait 7 months to get paid. And the factoring rate on this is pretty low. It's usually less than 2%, 1.2, 1.3% factor rate. So you pay more money the longer the money's outstanding, the longer you're giving your customers to pay. But the bottom line is AR financing helps you in 2 ways. First of all, 3 ways. First of all, it lets you help your customers pay you on a longer term. Secondly, you're accumulating an asset you can use as collateral to qualify for programs like SBA. And third, you can use this asset and this asset alone to qualify for very low interest rate financing that's not looking at cash flow or credit. So it's a good solution if you have credit issues. If you don't have cash flow, it's a great solution to consider. Okay. And Coco says, good info. Thanks for tuning in, Coco. So equipment financing. So equipment financing is up to $10 million. You can get it as a startup new business. So for example, a client came to me and one of my friends, and she said, I need a big piece of equipment. I need a credit line to be able to buy it to get my business off the ground. I said, you don't need a credit line for the equipment. Let's get you equipment financing. Then let's get you a credit line, and the credit line can cover the down payment for the equipment financing. Because usually equipment financing, you need first month and last month's payment paid up front. You need first and last month's payment paid up front. Okay. So what happens with equipment financing is that you're able to get it as a startup. You're able to get the equipment that you need, and therefore you don't have to use credit lines, loans, business credit, other kinds of financing to pay equipment. You can use specialized equipment financing, save your loan money, your credit line money, your business credit money for other purposes. Okay, you can typically get approved with mid 500 FICO score. You can get it even as a new business. If you have better credit, you've been in business 1 year or longer, you can get equipment leasing. If you own equipment free and clear, or someone around you does, you can use that as leverage and get what's called equipment sale leaseback and actually borrow against equipment that you already own. Enterprise SBA loans, okay? These are a great way to go because you can actually get long-term low interest rate money. Now, it says minimum FICO 620. We find that your personal credit and business credit needs to be good because you need a FICO SBSS score high enough. You have to have established business credit to get an SBA loan. You need to have pretty good personal credit with no major derogatory items. You need to have collateral equal to the loan amount. I just told you about AR financing, account receivable is one of the best assets you can use for this. And you also need to show tax returns for 3 years that show that you're making money. If you have that, there's a good chance you can qualify for SBA loans. And again, this is long-term, low interest rate financing that can really help you there as well. Let me shut down. I think that thing's going to stay. I'm trying to get this little thing off the bottom of my screen. Okay, there we go. So a good way to go if you're a very well-established business. Now let's talk about grants as well. Keep in mind grants are competitive. A lot of them are not, depending on how popular they are. And the more you get into minorities, the less people are competing for them, right? If I look at a federal grant for a business owner and anybody can apply, well, then I got a huge market of people that's applying. If that grant is only for a women-owned business, well, then that's a smaller pool of people applying. If it's for an African-American woman-owned business, well, then it's even a smaller tier of people applying for that. So kind of the more of these grants you can get that's narrowed down to a niche of a woman-owned business, or if you're a minority-owned business, then kind of the easier it is to qualify because there's less people that are actually even applying for grants. You know what I'm saying? If you don't, think about this. Has anybody ever told you that they even applied for a grant for their business? It's very rare. A lot of people aren't taking this step because it takes a little bit of work. And I hate to admit it, but a lot of us are lazy. We don't want to do it. Okay, but this is a great way to go because there's not a lot of competition, especially if you start looking specifically at grants that are available for women. So let's look at the Amber Grant. The Amber Grant awards one prize of $10,000 per month to a woman-owned business. One of the recipients also receives an additional $25,000 grant at the end of the year. Applicants only need to tell their story and turn it in along with a $15 application fee. Okay, so this is a great way to go. It's free money. It's grant money. It doesn't have to be paid back, and it's specifically for women-owned businesses. The Cartier Women's Initiative Grant or Award, this has a regional category, and that regional category awards $100,000 for first place, $30,000 for second and third place. Okay, women-owned businesses and fundability. Again, you got to set up that fundability the right way. That's going to help you not only qualify for those grants, but also a lot of the other funding that we've talked about as well. Now, only 7% of business Credit lenders will report positive payment history, so you got to keep that in mind. One of the things you want to do to improve your fundability is build your business credit, because so few of the people that give you credit actually report that credit to the business credit reporting agencies. So hopefully that helps give you an idea of some specific funding that can work for women-owned businesses. We've got more training and more different types of funding available on our YouTube channel, youtube.com/credit suite as well. But we've got a couple grants. We've got some funding that's based on credit, where collateral and cash flow doesn't matter. We've got other funding products we talked about that's based on cash flow, where your credit and collateral don't matter. We talked about funding that's based on collateral, where your credit and cash flow don't matter as well. And also keep in mind, we can help you with financing. We never charge you any money to do so. It doesn't mean the money's free. It's not, for sure. But that being said, this is definitely a solution where we can help you get the money that you need, and be able to work with lenders, get the interest rates, get the fees negotiated for you. And we never charge you any money to be able to do that. And it was being the investor solid jobs. The list is edgy for me, but for women. Okay. So that being said, if we can help you along the way, feel free to give us a call for a free consultation. Our number is 877-600-2487. That's 877-600-2487. On that consultation call, 3 things going to happen. We're going to do a fundability check for you, tell you everything that's wrong with fundability that you need to fix to become more fundable. Okay. The second thing we're going to do is get your business credit reports with Dun & Bradstreet, Equifax, Experian at no cost. That costs $250 from the bureau. We're not going to charge you any money. We're going to get them. We're going to go over them with you. We're going to give you tips and tactics to establish your business credit. Business credit's a great funding option for any business. And we're also going to qualify you for funding. All the funding you can qualify for now, we'll tell you on one call everything that you can actually get right now, get approved for. And if you got value, make sure you like and subscribe, and keep in mind that we go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. Instagram, Twitter, Facebook, we have daily tips. We have a podcast you can listen to on the go. We have hundreds of videos on our YouTube channel, all really themed around being able to help you get money for your business, except for our podcast. That's where we interview a lot of high-level people that teach you all the aspects of running a business, so that can help you as well. And C. Denise says, what's the proper way to build business credit? This training isn't where I'm going to cover that in depth, but let me give you a free guide that can help with that, C. Denise. creditsuite.com/EIN. If you go to creditsuite.com/EIN, you can get our step-by-step guide for building business credit. We've also got a group with like 50,000 people on it on Facebook that's very active called Get Business Credit. It's a Facebook group. There's a lot of training there that can help you along the way. YouTube.com/credit suite, step-by-step process built out for building business credit as well, in depth. I can give you an idea of the high-level overview, but you're basically going to improve your fundability, which is what we talked about. You're going to build initial credit using credit line hybrid, which we talked about today, or starter vendors. The next step is you're going to get 5 of those accounts reporting, make sure they're reporting, then move to retail credit, then move to fleet credit, then move to auto financing and cash credit. That's the sequence of building business credit. If you want more information on those exact steps, then we just shared the link in the chat. You can also go to creditsuite.com/EIN, and just keep an eye out for future trainings. We will cover, even next month, I think June 15th, we will actually cover an in-depth hour-and-a-half long walkthrough of everything to do with building your business credit. So make sure you look out for that on our social channels as well. Thanks for tuning in. Have a great day. I look forward to seeing you in our next training, where we talk about more cool ways to get money to start and grow your business.